One of the big pivot points of the week we were looking ahead to was the US CPI data out on Thursday. It's just passed, and we have seen numbers that have beaten on both levels of this. The headline consumer price index rising to 8.2% in September year on year after an 8.3% print in August. Yes, it was less than we saw in August, but we had been expecting this to drop back to 8.1%. So that is more hawkish than we had been expecting, but I think it's more important to look at the core CPI numbers. These are numbers that don't include that volatile food and energy part, which we know is generating a lot of heat in terms of inflation in the US economy. But look at this core number, 6.6% in September year on year, up from 6.3% in August. We'd had only expected to increase to 6.5%. Now, the effect of this has seen two major moves in the market. This is the S&P 500 trading before the market opens on the IG platform. 10-minute candles, you can see quite clearly here the downside that we're seeing in terms of the move. We're only 15 minutes after the release of this data. Now, insofar as where we are on a day-to-day basis, again, we have this print on the IG platform before the cash session gets underway. And we're seeing a new lower low for the year. Earlier today, we were reporting the fact that the S&P yesterday closed at levels not seen since November 2020. Here we are now on a further leg on the way down. And if we get a close at these levels, it'll be the the lowest close we've seen since the 4th of November 2020. And we're waiting for the cash session to get underway. We're 27.37% down from the record high we saw on the S&P back in the early part of January. But look what it's doing to the dollar as well. It's improving the position of the dollar. So for those long dollar positions, you are making money. This is the euro trading lower against the US dollar at 96.47. Not quite as low as the two-decade low that we saw earlier in the month at 95.36. But we are on the way down. So you can see that we have a lot of movement in the wake of that stronger than expected CPI number that we've seen in the United States. It's negative for equities, but it's positive for the dollar. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.